What's up, everybody? Welcome to the October 29th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're just going to get right into the hot button issues. We're a little late this week. I was out for the first couple of days this week, but we're going to fire off because really the most interesting stuff is happening today and the rest of the week. So let's get right into it. Let's start with Fed Day. The Federal Reserve is going to meet today and make a decision on whether they're going to cut rates. Again, another 25 basis points is the most likely. I think as of this morning, the probability that I last saw was 98% probability of a cut. So pretty much everyone believes they're going to cut today. And they haven't given any indication that they're not really. So I think they're still on the same path. We'll see what the next one holds. I think what gave them the most clarity, and this is why the market has seen its rally here over the past few days, especially, is that one of the government reports that we're still getting is the CPI report. And the CPI report is our inflation report. And the inflation report showed it was still elevated, no question about it. We are not in normalized territory. We're not what we call target inflation for the Fed. But it was below where the level of the expectations that were out there, just slightly below. I mean, it was 0.1% different. So it's not like it was drastically lower, but it also didn't show any evidence of a significant reacceleration of inflation either. So it's given the Fed enough to probably say we can continue on the path that we're doing right now. And especially with number 2 bullet point that I'll get to here in a second, they're starting to see some cracks in the labor force, and they have commented on this at this point now. So their clear concern is much more jobs than it is inflation at this point right now. I think they'll still monitor inflation. I think the commentary you'll see will still be very cautionary with regard to what tariffs are going to do for the long-term effects of inflation and how they're going to combat that. But I think you'll get more of an estimate that they are concerned more about the cracks in the job market right now and making sure they're not overly restrictive to continue to reduce those jobs. How that relays, though, is a little different. Number 2 is that we're starting to see some big layoff numbers. Amazon came out with a very large layoff. Target, I'm based in Minnesota, and Target is a big employer here, and they just announced a very large scale layoff. UPS was one of the largest ones we've seen in a while with regard to the number that they're expecting to be laying off going forward. So you're seeing this more and more. And I think that, again, so I've looked at a little bit of information from today and done a little bit of my own research. And, the late 90s weren't as robust of a job market as people remember them being. There was a lot of called like Mick jobs and all that stuff with regard to, I remember there was a running joke was, oh yeah, there's still jobs out there. Oh yeah, I have to have 4 of them just to support my family. Those kinds of things were out there in the 90s. I think what you're seeing now is companies are starting to understand, or at least make some assumptions on the productivity they can get from artificial intelligence, and are making assumptions about what their workforce they need going forward as a result. And you're seeing that balance. It's never going to be perfectly balanced, right? We're going to probably overshoot this to a certain extent. We're going to have some disruptions. We're going to have some problems with regard to artificial intelligence and its ability to replace the incremental worker, right? If I can get through my existing workforce or even a slightly reduced workforce the same or greater level of productivity that I did before, it's not going to hire as many people as I did in the past. So that's what you're seeing, I think, from the large scale employers out there, is they're all trying to figure out what's the rational number look like for them. Now, again, in Target's case, they've been having some difficulties, right? Is that operationally they've been challenged here for a bit. Stock has been pretty terrible. And so their layoffs come as more of a classic, and I think UPS to a certain extent too. But you're seeing more and more in the earnings that have been reported here lately, the discussions about artificial intelligence with regard to productivity, which then goes to regard to jobs. So I think we're on the cusp of this. I think we're going to see more of it before we see the end of it. I think I think we have further to go in this type of approach before we're done. And so I get why the Fed is concentrating a little bit more on jobs, but I'm not sure that supporting interest rates or, making interest rates lighter is going to have as dramatic effect as it has maybe in the past. And I've talked about this in other segments before, and that the people that are hiring, the people that are doing artificial intelligence, and the people that are spending aggressive amounts of money, they generate so much cash that it's less important for them what the rates look like going forward. They don't have to go to external markets in a lot of situations to fund what they're trying to do. So they're going to do it anyway. Now, the incremental and the small business, absolutely. But from the side of the large scale employer, if they're going to use AI and saying, we're going to put all of our CapEx and all our resources towards artificial intelligence, well, that probably means less people overall. So there is a balance that has to be struck. I don't think we're anywhere near that balance right now, and we're probably going to get further skewed before we figure that out. Turning to earnings, the situation at earnings here is big tech and AI are coming up this week. I think this all eyes will be on artificial intelligence focus with the big tech companies. Microsoft, Google, Meta, Amazon, and Apple all report this week, today and tomorrow. So we'll know a little bit more about the trajectory of spending. We'll know a little bit more about what they're looking at and what they're looking to do in their own workforces. Again, Amazon already announced a pretty significant layoff. What are they doing in their own workforces? What do they see from a CapEx perspective on the capital that they're going to spend to continue to proliferate AI into other companies and their own companies as well? And just what does that look like over a longer period? So I think that's what everybody's going to be paying attention to with regard to these companies. There will be some, what is this effect on the economy? What are they doing? What are they seeing? I think with these companies, that's a little bit less of a focus. I think the artificial intelligence rollout, the landscape, what they're seeing, what they're spending on is probably more important to what the sentiment will be on the stock than anything overall economy related. Turning to the fun stuff, if you will, the non-market stuff. I am in kind of heaven right now. This is my time frame because I love the World Series and basketball has started and football's right in the middle. So you're getting basically all my favorite sports in one at this point right now. But really what I wanted to talk about is the super unicorns is what I'm calling these two, Shohei Ohtani and Victor Wembanyama. If you're not sports knowledge is limited, that's absolutely fine. No problem here. Shohei Ohtani plays for the Los Angeles Dodgers. He both pitches and hits, which is extraordinarily rare, and he's excellent at both. Probably the best among the best we've seen and among the best in the game at both sides, which just hasn't happened since the Babe Ruth days. Right? So we're seeing something that we haven't seen really in most of our lifetimes. The other side of that coin is Victor Wembanyama. For those of you who don't know him, it's argued where he could be anywhere from 7'4" to 7'7". He's gigantic, right? He's a pretty skinny guy, but he's gigantic. But the things he's doing on the basketball court, again, are just things we've never seen because he moves like more of a 6'8", 6'9" guy. He moves more like a forward than he does, a lumbering center that you would think a guy who's 7'4" to 7'7" would move like. He does not move like that. And so you're seeing the combination of height and agility and ability in one package that, again, similar to Shohei, we've just never really seen before. So you're getting a really interesting component right now from both of these people is that these are, again, we always say unicorns, we always say one of ones and that kind of stuff. In this instance, I think we got to come up with a new name. I'm calling them super unicorns for now. I'm sure there's a better name than that. But these two really shine as different. And if you're not watching them, even if you're not a sports fan, I think you can appreciate what these two are bringing to the table. So that's it for this week. Tune in next week where we'll have our next hot button topics. Until then, thank you very much and take care.